Hey guys, quick video here today on why I think Toronto condos are so undervalued right now. And in order to talk about that, we got to go through sort of a quick market update to see how different property types have done in different cities over the pandemic, to kind of illustrate what I mean here. So obviously we have the exogenous force of COVID, right? But if you believe that the market was priced efficiently pre-COVID, meaning that, a condo in Toronto was roughly priced fairly versus a detached in Toronto versus a condo in Barrie type of thing, like values aligned well, then you'll see what I mean. So first thing we got to look at is the average price of these different types of assets in different cities over the pandemic. So we're going to take February 2020, pre-pandemic numbers and the height of the Toronto condo market versus June, so last month of this year. And you look at Toronto condos here and you see no price growth, so essentially flat across the last year. Now, obviously, there were times when you could get condos at 5 or 10% below the peak prices. That was roughly in September through December. But that glut of inventory, the weak-handed investors, we'll call it, or just the investors who had a little bit of fear and wanted to get out of their condo, and people who were looking to move outside of the city, that inventory is now gone. So if you look at this year's inventory, we're back at seasonal norms. The difference is this year we have more buyers in the market than previous years, so we have less months of inventory. We're seeing condos sell quicker and with more offers. But anyways, moving back to the price, got a little distracted there. Moving back to the price averages here, you'll notice that so Toronto condos are flat, right? But if you look at Oakville condos, for example, they've gone from an average of $556,000 to $710,000. It's about 27% price growth. Vaughan with modest price growth at 6.5, Mississauga modest at 6.3. Barrie, this is what's most interesting to me. So Barrie prices, the average condo in Barrie's gone from $375,000 to $535,000, so 43% increase. And this follows with the narrative that people are leaving the city looking for a little bit more space for, a little bit less money. What's interesting to me is you look at those numbers and you say, okay, I can buy a condo in Barrie for $535,000, or I can buy a condo in Toronto's East End for $572,000, almost the same price, right? Less than a 10% difference between the two. If you don't believe that that's a market dislocation, that those are inefficiently priced, then I don't know what to tell you. You shouldn't be looking at investing in property at all. Because when I look at that, that's pretty clear as day that either over the next, as things return to normal in the city, we start to see more life in the city, people less working from home, the restaurants are open, the rental market is already starting to recover really rapidly, and I'll get to that shortly. But as that starts to happen, as that transition starts to happen, obviously one of two things has to happen. Either Toronto condos have to appreciate so that those values align properly again, or Barrie condos need to correct, which I don't think is in the cards really. With rates underpinning everything, I think realistically Toronto condos are going to appreciate rather than seeing these other asset classes depreciate. Now, to talk about the detached numbers, because obviously detached properties are the big winner of the last year. They've done well through the entire pandemic as people have been looking for more space. The average price of a Toronto detached has gone from 1.48, so just shy of 1.5 million to 1.7, so it's about 14.5%. And then in slightly cheaper markets like Durham and York, you've seen more price growth because obviously the entry price is lower, so it's easier to push those numbers higher. So York has gone from 1.2 to 1.5, Durham from 700K to 1 million. And then Barrie Detached have done roughly what their condos have done, 42% appreciation. So you look at, Toronto condos have been flat for the past year. The prices haven't changed, but everything else is up 15 to 30%. So naturally, what should follow as things open up is Toronto condo prices need to appreciate in order for those values to align again. And it's not like we're in uncharted territory here, right? So it's important to look at the average price of a detached versus the average price of a condo as an indicator. So when you look at it today, you're seeing the average detached in Toronto is 1.7 and the average condo is just over 700,000. So you're looking at about $1 million difference between the two. We've been there before. So in 2016, we had $1 million price difference. And in 2016, if you don't remember, detached just did incredibly well, appreciated incredibly quickly, an aggressive seller's market, multiple offers on absolutely everything. And condos stayed with their usual appreciation, 4, 5, 6% a year. Well, what happened at the end of 2016 and through 2017 is Detached corrected a little bit downwards, but more than that, condos appreciated 20 to 25% depending on neighborhood. It was the best year for condos on record. And we're right back there, right? So logic follows that we could probably have a repeat performance of 2016, 2017 for the condo market. And that's kind of what I'm betting on here. Something you could use as a leading indicator is the fact that the luxury condo market is absolutely on fire. So quick recap on months of inventory. Months of inventory here is a very simple way to deduce how many buyers versus sellers there are in a market, right? So anything below 3 months of inventory is a seller's market, and anything above 6 months of inventory is a buyer's market. For point of comparison, Miami has 7 months of inventory, and Manhattan has 14 months of inventory. Toronto condos have 1.5 months of inventory. What's really interesting about it to me is that 1,000 to 1,600 square foot condos are all in a seller's market as well. So $1 to $1.7 million condos are in a seller's market. Now that's atypical because the entry luxury segment for condos in Toronto, that 1 to 1.5 mark, historically is usually in a balanced to buyer's market because there's not a lot of people looking to spend that much on a condo. There's usually more inventory than buyers in that price point, but not today. And I can tell you anecdotally from running around with buyers in that price point, historically it's my favorite price point to work in because $1 to $2 million goes a long way in the condo market in Toronto, and it's a lot easier to work in that market because there's less bidding wars. However, lately that just hasn't been the case. I can show you with data here. If we look at May 1st through June 7th of 2019, which was a strong year for Toronto condos, not the best, but certainly not the worst year ever. Sort of your typical seller's market, 7, 8, 9% appreciation. And you look at that entry luxury segment, so condos in the $1 to $1.25 million price point. We sold 124 of them, and 28% of them sold over asking price. Now, if you look at the same time period of this year, we sold 169 of them, and almost 50% of them sold above asking. The days on market also was, median days on market was 9 versus in 2019, median days on market was 16. So the data supports the anecdote. The luxury condo segment is flying, and I think it has to do in no small part with this fact here that 1.7 million doesn't go very far in the detached market in Toronto, but it does get you a lot of condo for the money. So there's a lot of value in it, and I think a lot of people are recognizing how much value there is in the condo space right now because the prices haven't budged in over a year. And just to further illustrate what I'm talking about here in terms of, thinking that the market is priced inefficiently right now, is here's a recent sale from this month in Square One. So this is a building in Square One. This is a 631 square foot 1+ den with parking, sold for $686. Around the same time, here's a 624 square foot 1+ den with 1 parking in the heart of downtown in King West. Sold for $702,500. Similar size. This building's slightly newer, but a direct comp if they were side by side. So for less than $20,000 more, you can get the same unit downtown as Square One. Again, just goes to show the values are out of line right now. Toronto condos are significantly undervalued. Historically speaking, anyways. And I think as Toronto continues to open up, we're going to see those values correct in a big way. Another way you could look at it is just the rental market. So if you look at the rental market as an indicator, here's all of the condos listed for lease every week over the last year in Toronto. You can kind of see relatively steady level of inventory. But if you look at the showing numbers for how many people are actually going out and viewing these condos listed for lease in Toronto, you'll notice an uptick in volume over the last, through 2021, but especially over the past few weeks. And if you look at the actual offer numbers for how many people are placing offers on listed condos for lease in Toronto, huge volume increase over the past few weeks. And I can tell you firsthand that it feels like everybody is looking for a condo for lease in Toronto. Everybody wants in by August or September 1st. The rental market is going crazy right now. So soon we will see upwards pressure on that rental price. And inevitably, I think in the next 6 to 12 months, you'll see all of the decline in rental rates over the past year. I think you'll see them erased and then some.